Good morning, everyone. It's Randy MacLean at WayPoint. I'm excited to be talking to you this morning. We're going to be reviewing some new capabilities that we have in WayPoint related to rebates in particular. We're going to be talking about rebates in general. Cover some new analytics and some new capabilities that we think are going to make a big difference. And we want to spend a little bit of time talking about what we're seeing happening in the market. We're going to be talking about the math of common rebate programs. A quick review on that because it is important and everybody should be aware of it. And then we're going to look at some of the new analytics in WayPoint and what to do with it. All right, this is what we've been seeing across the last 3 years. As the economy has been shifting, we've been seeing a huge shift in what rebates mean to profitability. In 2015, about 42.4% of bottom line profits, net profits, came from rebates. In 2016, it was up to 56.7%. And at the end of 2017, as we close that out, it's a whopping 72.8%. So nearly 3/4 of the profits on the market or in the market that we see are coming from rebate income. The rebates represent about 72% of the profits that we're seeing out in the market. What this means, looking at it another way, is that if you look at profits without rebates and then profits with rebates, in 2015, it increased the bottom line by about 43%. 2016, it increased it by 66%. In 2017, it was a whopping 122%. And so that means the companies that are maximizing and optimizing are focused on getting the most they can out of rebates are taking a look at a profit level and more than doubling the profit level through the use or inclusion of rebates. This has done more for the bottom line in the distribution business than any margin or pricing programs, although those are very, very important. But it's getting increasingly difficult in a competitive landscape to make a difference with pricing unless you're using an intelligent pricing system so that you can make sure that you're targeting it perfectly and you're pricing relationships rather than pricing products. A quick review of the common rebate programs, and we've looked at 5 pretty common rebate regimes. We're talking about a single sale where we have an item that costs $65, it's selling for $100, and there's 5 different scenarios that we can think of where rebates occur. And of course, what we're talking about to differentiate is that we get rebates back from vendors, and then we offer rebates to customers, and there's a number of permutations that we can have between having no rebate program and having different combinations of rebates coming in and going out. So looking at a regular sale, $100 sale, $65 cost, it's a 35% margin. We make about $35 of gross profit, and there's no impact rebates. This gives us a nominal bottom line of 4%, which is a reasonably good indicator of profit rate in most industries. There's some variation between industries, and of course, your position in the industry can have a huge impact on this. And your position in the industry has everything to do with your customer mix. As I said, 35 margin, 35%. Now, what happens when we go to a program where we get 2% reduction in cost from rebates from the vendor? So that translates into about $1.30 rebate from the vendor, effectively increases the margin to 36.3%, gives us an increase in the bottom line of $1.30. And that takes our 4% up to 5.3%, which basically increases our bottom line by 32%. So get a 32% increase in our bottom line profit rate and on the bottom line profits by getting a 2% rebate back from the vendor. And of course, if we can get more than that, or there's some other factors that we can negotiate with the vendor, it can make a huge impact mathematically and financially on the company. The second program is where we have a 2% rebate from the vendor and we pass that value through to the customer. And this is commonly what we see in terms of price support programs. We may have some targeted customer or we may have some special stuff from a particular vendor and we're passing that through to the customer. So we take that $1.30 rebate that we got and we basically reduce the customer's price by $1.30 as well. It still increases our margin by doing that, or increases our margin rate. Takes us from a 35 margin up to a 35.5 margin, but doesn't have any effect on the bottom line. However, our bottom line as a percentage of revenue goes from 4% to 4.1%. So we get a nominal increase in our profit rate, but we're not actually getting new profits. We have slightly less profit because we're passing it all through, and that comes out of our sales price. A program that I've seen, or an implementation of rebates that I've seen, which I think is a mistake, is where we have a program where we get a 2% reduction from the vendor, so we give a 2% reduction to the customer. And that means that we're getting $1.30, but we're giving away $2. And that's not a very healthy situation. That effectively keeps our margin the same at 35%, but it reduces our operating cash and our bottom line by 70 cents on the $100 sale. So the effect of that is it takes our 4% bottom line down to 3.4%, or basically takes almost 16% off the profit rate of the company. So we have reduced cash flow or operating cash, and we also wind up with a significant decrease in the profitability of the company if we don't think this through and just give the customer the same percentage discount that we're getting from the vendor. The final regime that we've seen is where we have a roll your own rebate program. And if you have sufficient profits in the relationship, then this can be an excellent way of keeping customer loyalty and building volume in a customer account. However, if you're doing it from your baseline with a customer that is not particularly profitable, then this can be very, very detrimental. In this case, we're giving $2 away in the price of the product, which is reducing our margin to 33.7, or takes it down by 1.3%. More importantly, it's taking $2 off the bottom line, and that takes us down to a 2% profit rate, cutting our profits just about in half. And that's deeply problematic. When we're talking about gross profit, it has another purpose rather than just looking at pricing or what you're calculating with margin of the customer. The gross profit dollars are actually the dollars you use to operate the business. That's actually the source of your cash flow. That's your operating cash. And when we look at these things, we can have with various rebate regimes, operating cash that's effectively anywhere between $36.30 all the way down to $33 on that same $100 sale. This means that the deltas that we get from the rebate programs, anywhere from $1.30 up to $2 down, make a significant difference. And those numbers may not seem like a big deal, but a 4% bottom line means where all those things are operating against only $4 of bottom line potential that we have in the sale. And so the very small increments in the rebates can make a very large difference in the performance of the company. Now, almost everybody that's on the webinar right now is probably abundantly aware of these things, and this may seem like 101 stuff. But what's really important is not everybody in your company may be aware of this. We don't have every salesman being concerned about what the rebate impact is. In some cases, the people are purchasing are more focused on just making sure the product arrives and that maybe they're getting the best price than they are on really recognizing how the flow of these things go through and what impact this has on pricing and so on. Here's WayPoint, new as of May. When we don't have the advanced menus turned on, you get more simplified basic menus with the things that most people use most of the time. If you want to see the full menus, you can turn on the advanced menus with the checkbox. And that's what we do to see the rebate metrics reports. Those are more advanced reports. So the first one I want to look at is the vendor relationship metrics, and that's because it's one of the most important reports that we have. This report was designed to be the central report that you would use when you're visiting with a vendor, making sure that you're getting the best relationship with your vendor, your supplier. And so this report brings all of the things that have to do with the vendor relationship together into one report where you can zero in on a specific vendor and you can also see how they compare with other vendors. A couple of new features you'll see in WayPoint. There's a new help button, pulls up a help specific to the report that explains all of the columns in detail and also describes what it's used for and how to utilize it to maximize your profitability. We built a new reporting technology, which will be rolling out in all of the reporting over the next 60 days. These new rebate reports are the first of these new reports, and I have a surprise for you at the end of the session that I'll talk about. Some new features that we have in the report. We have an improved highlight, so it's easier to read the report. We have sorting in place, so right now I can get all the vendor rebate numbers to sort to the top of the report. And so we can sort the report on every column. So let's take a look at what's on the report itself. I'm going to focus in on Cloverleaf Industries here. So if I'm going to have a meeting with Cloverleaf, first thing I can look at is what the amount of credits have been on sales for Cloverleaf products and what percentage of revenue that represents. So we're running about 1.7% of sales coming back in credits. We have some vendors here, we're getting 3.5% of the sales back. Down here we get 7% of the sales coming back. Credits are unbelievably expensive and destructive to profitability. Second thing we can look at is customer rebates. That's how much money we're sending out to the customer in the form of rebates. And on Cloverleaf products, sending out about $6,300, or we sent out $6,300 in rebates. That represents about 0.3% of revenue. It looks like we have rebates on a few select customers for some level of product, and we can see what the impact is on the rebates. Because remember, rebates that we give away are deducted from the rebates that we get, and so they can have a big impact on profitability. Then we can look at cost of goods, which really represents our purchases from the vendor. So we bought $1.5 million or just over from this particular vendor, and we can can see how they compare to other vendors. We got $38,000 in rebates, which represents about 2.4% of our purchases. This is something that we would always want to be negotiating. If you can get another 1/10 of a point or a 1/2 of a point in rebate money, that goes straight to the bottom line. You can also take a look at this and say, well, you're giving us 2.4. We have other vendors are giving us 2.9. Is there something you can do? We show the freight in here, and freight in or prepaid freight is an excellent way to get a quasi rebate on the product. If you're a significant purchaser of the product, you can be working the vendor to cover the transport costs or to deliver the product prepaid. And in this case, we're paying about $43,000 to bring the product in from Cloverleaf. That represents about 2.8% of our purchases, or effectively increases our cost on the product by 2.8%. And if we could get them to cover most or all of those, you might be able to negotiate some deal where all orders above a certain threshold are prepaid. You may be able to get the bulk of your purchases on a zero freight basis. In this case, if we could negotiate prepaid freight on this particular vendor, it would effectively take our rebates to over 5%. That would have a huge impact on the bottom line if we can do something with that. So those numbers are shown here. We've also got some information on the gross profit per pick, so we can get a sense of how big the orders are, the picks are for the vendor. And where we have a vendor where these numbers get very small, it's going to be difficult to make money because we're going to have small order problems. If we have low value, high turn products here, getting the vendor to bundle them up so that you're selling 2 packs instead of singles, or cartons instead of, so having a sense of what the gross profit per pick can help you very much. Of course, we want to know what the margin is that we're selling the product for, and we should know what the expense rate is on the product. The expense rate is an advanced metric because there are certain products that are inherently more expensive to handle, and they're not more expensive to handle because your warehouse is more expensive. They're more expensive to handle because it consumes more of your warehouse and other operating resources in order to handle. So there may be more returns on them, or the nature of the relationship. The people that buy that product tend to be further away and have higher transport costs, or tend to come more frequently, or tend to have smaller orders. Whatever the case is, you can get a sense here for all of the sales for a particular vendor, how that fits. Finally, we can see what the NBC is. This is vital because this is representative of the operating profit for the particular vendor, and you can find out which vendors are making a larger or smaller contributions to your operating profit. We have the NBC rate, which is essentially the profit rate on the products from this vendor, and then we have rebate impact. The impact of rebates is $32,000 increase in operating cash, and it basically increased the bottom line by 18.5%. So that NBC rate, that 10.3%, is about 18% higher than it would be if we didn't have a rebate program with this company. So we'd be looking instead 10.3, we'd be looking at something like 8.5 or something like that. And then finally, we have the customer count. How many of our customers actually are buying products from this particular vendor? Where we have situations where there's only one customer buys from this vendor, we have de facto special stock. There are few circumstances where it would be wise to be stocking any product from this vendor at all. We can, of course, scroll down and see what's happening with other vendors. And one of the things that a lot of people will be pleased with is that the report headers are now fixed in place and will not scroll off the bottom of the screen on the new reporting. And as we convert all of the reports in WayPoint to this capability, then we're going to have that. We've been waiting a long time for browsers and HTML to get to the point where this was feasible, and we finally crossed that threshold, and we're very excited about that feature as well. All right, so this is all about how we make things work on the buy side. Now what we'd like to do is how do we support this? Because frankly, after coming off a record year of rebate income and getting such a huge impact, this is something that we'd like to lock in, make permanent, and grow. A lot of companies are actively working the rebate programs and looking at how to maximize their rebate income. It's not like in the old days where you sell a lot of stuff, you maybe have negotiated something with a vendor, and then you get this really nice check at the beginning of the new year, and you're whistling happily as you go put it in the bank, and then you go back to business as usual. One of the reasons why we're seeing such a huge impact with rebates is because WayPoint clients tend to be self-selecting. Companies that want to know more about what's going on in their business and are using that to optimize their business and move ahead of their competition would use WayPoint or would get WayPoint for that kind of capability. And so we're a little bit biased in terms of the numbers that we see here, because we're really looking at some of the top and best run companies in the world and what they're doing with rebates. And so that's one of the reasons why we're seeing companies where they've increased their rebates by 120, their bottom line by 122% through the use of rebates, where they have nearly 3/4 of their bottom line coming from the rebates. And they're also using the rebates, of course, to become much more price competitive in the marketplace so that they can take a larger share. As they're working to make this happen, and as we would recommend that everybody work to make this happen, you want to be thinking, well, we have a half a year left in 2018. What are we going to do in the last half of 2018 to make that rebate check in the beginning of 2019 the biggest, best ever? And then we continue on from there. How do we make it 90% of our income? How do we increase our income and keep it at a fixed, 50% of our income? What is it that we do to increase our bottom line? And so there are certain things that have to be done in order to make that happen. So we provided some reports to help support that. On the sales tab, we have a territory rebate metrics report. And this particular report ranks all of the sales reps and shows which ones are producing in their territories the lion's share of the rebates. So again, we can take a look by rebate impact. This is how it's scored here. And we can see that Jocelyn Campbell is the rep that is producing the most rebate return. Now, she's also looks like the largest rep by revenue, although she might not be. And so that may seem natural. But it's entirely possible for her to have high sales and not be selling any of our rebated product. And that would not be the best situation. Obviously, we would like to, I guess, reward the vendor for providing a healthy rebate program by making sure more of the product sells through. But and that's a nice quid pro quo for getting the rebate program from the vendor in the first place. But it's really in our best interest to maximize the amount of return that we're getting on the rebate program that we've been able to negotiate. So we really want to make sure that we're where we have products that are equivalent and one is rebated and one is not. We'd like to see more of the rebated product flowing through a territory. So we certainly want to see where that's being done successfully and make that into make that a program that we replicate in other territories. So and there's a lot of ways of doing that. We won't get into it here, but the main point is to see where the rebates are happening, find out what we can do to maximize them, and to be able to recognize and reward the reps that are doing the best job of making sure the rebates are happening. In order to do that, we could take a look at a particular rep, and I'll just pick James Coggins here, and I can take a look at the customer rebate metrics within the territory. And again, I can start looking at the rebate impact on a client or customer by customer basis and see that we're getting the best rebate impact in Millennium Bostonian. And then down below, we have other customers that are buying significant amounts, but not so much in terms of rebate impact. In fact, we could sort them by revenue here and see where we have, we're only getting 8% impact on medical life. We're getting a 76% impact on our cash flow and profitability on Stokes Merrill within the territory. So we could actually be looking at the rep accounts. We could be asking what could be done in order to get more rebated products sold through those territories to increase the profit that's being generated in those territories. And then finally, so that we can make some selections in terms of what the products might be, we can take a look at the individual product line. And here we're looking at the products that were sold by this particular rep, but we can take a look at what the rebate impact is by product, or we could take a look at various products within a product line and have an idea which ones are providing more rebate dollars or more rebate income and which ones are providing less. So the idea was to get a four-dimensional look at the rebate impact and what's going on within the business in order to maximize the income that we can get from rebates. So just to wrap up, The points that I wanted to reinforce this morning is that the back end can significantly increase profitability. It has been doing it in the best companies. It can be done in all companies. And I think every company has room for improvement in this if we get some senior management focus, some training, and some systems and tracking in place to make sure that we're not taking our eye off the ball on this important aspect of the business. We should be tracking and managing supplier relationships on an ongoing basis. We should be looking at rebate levels and rebate timing. Some of our clients have negotiated accelerated rebates. We have companies that use their buying power and their negotiating skills to get the rebates to be paid out 4 times a year rather than having them paid annually. And that can have a huge cash flow benefit in the company, particularly if the business is quite seasonal. You should be looking at prepaid freight. Take a very close look at your pass-through programs. If you have vendor supports, make sure that they're priced appropriately and you're not passing the rate through, you're actually passing the dollars through. Make sure that you're exploiting your relationships with buying groups and other organizations that will help you get more buying power and maximize or optimize your rebate income. And then make sure you're managing rebates at the sales level so that you're not only doing a good job of collecting rebates on what you happen to sell, you're actively selling the things that are going to deliver rebate income. We think this is the best opportunity or one of the best opportunities for profit growth. And just want to remind everybody not to be on autopilot. Don't assume that everything is good. Check in and make sure that everything that can be done is being done. And make sure you're tracking your rebate drivers on an ongoing basis. Use these reports actively. If you're not already a WayPoint client, of course, you should be using WayPoint for this, in my view, and clearly in the view of our clients. So make sure that you have something in place for this. Just to close out, there's some really exciting new things coming up now. WayPoint, we looked at the dynamic help system that'll be extended into all of the reports over the next 60 days. The fixed header capability and the sorting will be extended into all of our reports. I'm very excited about the new capability that we're building right now and testing. You're going to be able to create your own reports in WayPoint. There's going to be a capability for you to create the perfect report. No longer will you have to try and get information from several different reports. You'll be able to create the ideal report for whatever your purpose is right in WayPoint and be able to run it at will. We're going to be giving you local administration of WayPoint in the near future. You're going to get a lot more control over the way that WayPoint works internally and a lot more control over the security in WayPoint, which menu items are and are not shown to which people and which columns are accessible or not accessible to your users. Multi-language we've been working on for some time, and it's getting near the end right now. As of today, if your browser preference is set for French or Spanish, you'll be able to see most or all of WayPoint in your preferred language rather than just having to see it in English. And then July 1st is our target date to release intelligent pricing in WayPoint. We're going to have a whole new capability for you to do your own pricing programs. The top companies will still be using outside consulting firms to deliver the programs, to help implement the programs and so on. But we're going to give you the best possible base numbers for pricing out customer relationships and giving you a killer pricing program, which we think is the best opportunity for profits moving into the 2020s. I want to thank you very much for spending some time with me this morning. I want to remind you that there's more information on all of this at our website at waypointanalytics.net. I'd be delighted to hear from you by email or by phone. There's nothing I like more than spending some time talking about your business. So if you have some ideas, some comments, or some opinions, or even suggestions for me, I'd like to hear about it. Have a great day. Thank you very much. We'll look forward to speaking to you and hearing from you very soon.